Okay, last week we wrote this up because we were close to like a literal financial crisis. And I literally wrote up in the weekly report last week that we had to see bonds catch a bid. We know because Scott Bassett really took an emergency flight to Japan because of what was happening in their market was causing some weakness in the U.S. markets. It looks like we're at risk for another carry trade blow up like we had in 2024. But buyers stepped in last week. They saved the day. So it's weird to see this kind of price action. I should say it's weird because we have a new Fed chair coming up, and so we do tend to see more speculative movements in the bond market as we get closer to that transition period, and even after the new Fed chair steps in, there could be some weird patterns out of the market as they kind of feel him out. But where it's at right now is concerning. Let's say that. Let's not call it weird. Let's just call it concerning because yeah, if you lose 80 on TLT, I'll be shaking in my booties if TLT gets below 80. Let me say that. I'll be shaking in my booties. Potentially looking for equities to take a nosedive because let me tell you what, SPY is not paying attention to what's going on in bonds at all. And I don't blame it for not paying attention. Because even if rates went up another full percent, another full point, are we going to stop with the data centers? Are we going to stop with the AI? Are we going to say screw these companies? We're not going to pursue the technology of the future. We're no longer going to build drones. We're no longer going to build robotics because interest rates went up another percent. No. So okay, it's more expensive, but the march will continue. So I don't. If you wanted to scalp it, because surprise, like options on TLT can move extremely well if you're an options trader. Like these pay really well. You can even give them tons of time, but if you get the direction right, they can pay very well. I would look for a scalp back to 87, 86 even, and maybe it actually bounces to 88. Maybe you get that move. That would be the only thing I'd be looking for here. It'd be hard to bet on anything other than that because like the big thing here, I don't really want to talk about this too much because people usually like zone out. Oh, I don't want to change interval quick. Well, I gotta do it this way. 10-year yields. Sorry guys, give me a second. I think I got something in my eye. Okay. Okay. This is probably the most concerning thing about yields is this looks like no big deal, like a breakout, but it's really important when we talk about yields. So you see this trend line break? This looks like a nothing burger until you realize that the peak of that is 1981. So that's a 40-year breakout on U.S. rates. 40 years. Okay? And this is actually a much bigger conversation where you have one party of people who say this is a 40-year breakout. It's us entering into a new regime of higher rates, and AI is going to create a more productive economy where rates can actually afford to stay higher, and it doesn't matter if they go higher because we're going to be so productive and things are going to be so good with AI and robotics and everything. Like they're just background noise. It doesn't matter. There's the other party who I wouldn't say doesn't believe in. Some of them don't believe in the AI story, but they think that, I guess there's three groups technically, but they think that rates are going to go up. It's going to crush the economy, and then they're going to need to come back down. And so they would view this as something like, let me just pull up my fibs from the low to high and look to see if we hit a turning point where this is just a retracement over the last 40 years. And then from here, maybe they're looking for like 6.5% to be where this actually starts to trend back to the downside over the next, 10 years, 15 years, because they don't believe that there's any way with the way the world is and with the K-shaped economy. For the explanation of K-shaped economy is that the extremes are growing rapidly. So extreme poverty is rapidly growing at the same time that extreme wealth is rapidly growing, and the middle class is dying. People who don't even study economics, I think, are plainly aware of this, but because it's the norm for all of human history. However, it is rapidly, we used to have a U. I can't make a U with my hands. We used to have a U, okay? Why am I even using my hands? What am I, Trump? We used to have a U. Now we have a K with this being the rich people and this being the broke people, right? But now this chart, and we'll say this is like this is where we were, right? This is where we were like 10 years ago, and now this chart almost looks something like this. Okay? And like all the growth in the different sectors is coming from the super wealthy and the poor, and then there's like no one here. In fact, we'll just do dead eyes because there's like no middle class anymore at all. Like it's gotten more and more and more extreme, right? So can an economy that has no middle class, that has a slowing growth of its population, that has an older generation with rising expenses and a younger generation that's not making shit, actually sustain itself? Or there'll be a retirement crisis where the poor start to revolt, where violent crime spikes up, where the economy goes to shit because, and we have to bring rates down. And the people who think that rates can be persistently higher are completely drunk off their ass idiots. Which is, I pitch that narrative that way, not because that's where I fully sit in that camp, although I that's probably the least surprising outcome in my opinion, is that AI does meet all the expectations everyone has, and it does create more jobs, but there's a gap there. There's a gap between new jobs being created, where things are kind of shit and the government has to fix them and rates have to come down. You know, and keep in mind, even if we were going to use like classic technical analysis, you can even kind of see it here. And, you know, you treat this like any other bullish move, right? You would treat this like, oh, what we're looking for is some, 5-wave pattern, right? And honestly, if that's wave 1, wave 3 should be something crazy, bigger than 1. Actually, I didn't intend to actually do Elliott wave analysis here, but I think if I was going to, it would probably look something like this, and then a complex 4, and then a 5 is coming. I think that's how I would do that. And I would need to go to the weekly. Perfect 618. So that can definitely be a wave 2. What's that? Aren't you fed up? Yeah. Oh, actually, we're on a weekly. I do need this to be linear. So that might not actually be wave 3. It all depends on what the 5-wave pattern within this looks like, though. So there is definitely a third wave within the third wave. That is actually possible. Let's look at the retracements of the subwave pattern here. That's totally possible. That's totally possible as well. So this could be one of the counts, actually. It also could be. It's also possible that this is the count. Yeah, so that's actually possible that this is the wave count and that this is a complex A, B. Hold up. That would be 1, 2. Let me look at 1, 2, 3. A, and then there is a pivot there. C. If that were true, I'd want to see 1. It can go to 618 though, which is where it goes. It can. It's cleaner if it's 1. B waves can retrace over 5th wave patterns. If they do have clean fibs like that, it does make them likely, and it does, unfortunately, which I'm not a fan of because that makes it really harder to chart. So, shit, this is probably the wave count, guys, because it's too clean. It's way too clean. So I'd watch this 5% right here. And if it breaks above that, then look for it to go here. And that would be another A. This would be your B. And then you're looking for one of these to be the C. And in fact, I'm sorry, that's your B right there on the double bottom, because it's a 1, 2, 3 within that. You see the 1, 2 is 1, 2, 3. There's usually 3 wave patterns, which each 3-wave pattern. So there's usually an ABC within an A of an ABC. I'm sorry, that's confusing. Go take the course over on my website. It's completely free. But that's probably likely what this wave count is because it's extremely clean with the fibs. The fibs don't lie. So you're probably looking to see if C actually takes you to 5. What makes this awkward is it is climbing over the 5th wave, but that is possible. That is possible. It's just rare. 40-year breakouts are also rare. I have nothing else to say about that. What sucks is that means our technical analysis really isn't telling us much because that's a 5-3-3. So then how this reacts after this completes the touch back to 5% is literally everything. Because then you're looking either for a 5-wave pattern like this, or you're looking for a 5-wave pattern of this. I'm not being exact with levels. But that's when the new trend would appear. And in my opinion, that's when we're going to see who wins the argument between the whole thesis I laid out on where rates are going and what the future looks like. And keep in mind, that is also like the more minor version of the more serious argument of if AI and robots do everything, what does everyone else do? Who knows? I don't have an answer for that. If you do, let me know. But I haven't heard a good one, and I listen to I'm blessed to be able to talk to a lot of smart people on a very regular basis, and none of us know or feel confident about it. So,